Welcome to ForexTV.com. Today is Monday, March 31st. I'm Remy Hokie for your New York Forex Market Buzz. In afternoon trade as of 1 p.m. Eastern Time, Euro dollar is trading at 1 and 58.11. Sterling dollar is trading at 1 and 98.67, while dollar yen is around 99.80. U.S. equities are seeing strength with the major indexes up in positive territory right now. In a U.S. data heavy week, today's Chicago PMI rose to 48.2 in March from 44.5 in the previous month. The better than expected reading comes ahead of tomorrow's ISM's manufacturing survey. In other news, U.S. Treasury Secretary Henry Paulson outlined his blueprint for regulatory overhaul. Paulson's plan presented this morning included a few immediate steps to change how the government regulates the U.S. financial system. He emphasized this is not a response to the credit crunch or turmoil in financial markets. The plan will require congressional approval for the biggest changes. This afternoon, I'm joined by Matthew Strauss, Senior Currency Strategist at RBC Capital Markets. Good afternoon, Matthew.
Good afternoon, Remy.
Happy Monday to you.
Thank you.
Well, as we kick off the week and the final trading day of Q1 today, we're looking at a slew of U.S. data on manufacturing as well as employment. Given that we're seeing proposals for the largest overhaul of the financial regulatory system in the U.S., and also we have Friday's March employment report hanging over us, there are expectations of another contraction in that data. But with global central banks concerned about FX volatility and the downturn in the U.S. dollar, Matthew, first and foremost, what should investors in FX be keeping in mind this week?
Well, I think there's the usual two aspects to the markets these days. The one, the data, and this week for a change we actually have some two very important data series being released. Tomorrow we have the ISM manufacturing data, and it has dropped below the important 50 boom-bust line in February, and the market is looking for a further decline to 47.5. So that will paint a pretty bleak picture for the manufacturing sector. The risk is if we get a much weaker than expected number tomorrow, I think that will weigh heavily on the equity markets and also then on the carry trades as investors move out of higher risk trades and assets. But by far the most important data release for the week, if not for the month, would be the non-farm payrolls on Friday. We've seen 2 months of negative growth in the employment situation, and now for the month of March, the market is expecting another 50,000 jobs to be shed by the U.S. economy. If that's the case, the 3-month trend is going to turn negative as well, and this will increase the probability of a recession in the U.S. So I think the market is very concerned about these numbers, and any downside surprise to an already weak expectations could see your higher yielding currencies come under pressure.
Okay, Matthew, so tomorrow is April 1st and we begin the second quarter of 2008. So turning our focus to the FX market, let's start out with your forecast for euro dollar in Q2. The ECB remains focused on inflation, while the FOMC is expected to continue to slash interest rates, adding to dollar bearish sentiment for the now low-yielding U.S. currency. But from your perspective, what's your outlook going forward for euro dollar?
Yes, I think that divergence in monetary policy is going to continue because, as you've already mentioned, for the ECB, the main focus continues to be the fight against inflation. Overnight, we saw inflation increasing in the Eurozone to 3.5%, well above the 2% that the ECB is targeting. So there's no chance of interest rate cuts by the ECB in the near future, unlike the US, where we have the Fed more concerned about the growth outlook for the US economy than inflationary concerns at the moment. Consequently, we see the Fed cutting rates to as low as 1.5% by the middle of the year. However, we're not that bearish on the US dollar. We've seen significant US dollar weakness in the first quarter of the G10 currencies. It was only the Canadian dollar that underperformed the US dollar. All the other major currencies strengthened against the US dollar, and we could probably see some further strength going into the second quarter. However, we do do anticipate that we're getting close to the end of the extreme US dollar bearish environment. And as the market starts seeing some light at the end of the US economic tunnel, we could expect the US dollar to bottom and then start increasing in the second half of the year with some significant gains against the majors, including the euro.
Okay, Matthew, now that we've covered euro dollar, let's move on to dollar yen as well as the Japanese currency against some of the other majors. So what will be the drivers for the yen pairs, dollar yen as well as the yen crosses going into Q2?
Yen continues to remain one of the more difficult currencies to forecast, especially of late. It has become a proxy for risk aversion or risk seeking globally. So basically one will have to get a very good grip on what's happening to the equity markets. Did we see the worst in the U.S. economy, or will there be further financial problems in the U.S. economy? Our view is that at least for the next month or two, we'll continue to see significant volatility in the yen trading, whether it's euro yen, dollar yen, or even the yen against the high yielders. But again, as we see and hope for some stability in the U.S. economy in the second half of the year, the yen should start weakening and ultimately move above 100 again, trading towards a 104, 105 in the second half of the year.
Okay, Matthew, last but not least, before we wrap it up for today's interview, since you mentioned the high-yielding currencies, let's take a lock at the dollar block currencies with a special focus on the Aussie dollar. The Aussie, Kiwi, as well as the CAD have been at or near all-time highs against the U.S. dollar in the past few months. So given your economic outlook for the respective economies, what's your fundamental and technical